Intel lost $100 billion in 48 hours. This was not a stock market crash, not a financial panic, and not an internal error. It was the result of a single decision made in Beijing, without fanfare, without applause, and without public comment. China's Ministry of Industry and Information Technology issued a directive that effectively shuts down the Chinese market to all American microchip manufacturers. Intel, AMD, Micron, all of them. All government procurement, all public contracts, all companies financed by the Chinese state can no longer purchase a single product from them. The reason? Digital sovereignty, security, control over the technological supply chain. In essence, the beginning of China's technological self-isolation from American dominance. This decision was not just a blow to individual companies. It targeted the very structure of the American tech economy. It was calculated, prepared, and executed at a moment of maximum vulnerability. Intel lost nearly 1/5 of its market value. The drop was 18.3% over 2 days. This is not just a loss. It is a dismantling of the foundation. Nearly 27% of Intel's revenue in the year 2024 came from China, approximately $22 billion. That share has now been wiped out. Contracts with China Mobile, Huawei, telecom firms, and the energy sector all annulled. Procurement systems were rewritten within 24 hours. By the next morning, tenders were blocked, orders canceled, and shipments halted. All of it was done quietly, because silence is Beijing's greatest weapon. Unlike Washington, which pounds the table and makes loud declarations, China simply pulls away, and America loses trillions. But the real point isn't that China removed American chips from procurement. The real point is that China built an alternative, without the United States, without Silicon Valley, without Intel, because, as it turns out, they already know how. In September 2024, Huawei unveiled the Mate 70 Pro smartphone with a Kirin processor, manufactured entirely within China. A 5-nanometer process, without access to advanced lithography machines, without ASML, only domestic technology, domestic supply chains, domestic architecture. This chip is not a prototype, it's mass-produced. Huawei sold 45 million devices in 6 months. SMIC, China's chip maker, saw revenue grow by 47% in just the first quarter of 2025. Meanwhile, Intel's server sector revenue fell by 22%. The difference lies in strategy. The US tried to block China's access to equipment. China bet on scaling and self-reliance, and won. Fast. China has set a goal, by the year 2027, to completely eliminate American chips from critical systems. This is not just a plan, it is a directive. By early 2026, 80% of China's government IT systems must run solely on domestic architectures. Not just replacing Intel, making it irrelevant. This is a forced devaluation of all American products in the largest and fastest growing market on the planet. According to Morgan Stanley, the cumulative losses for American chip makers could reach up to $350 billion. These are not just numbers. This is the collapse of an entire industry. The United States cannot quickly fill this gap. The CHIPS and Science Act granted Intel tens of billions of dollars, in theory. In practice, the factory in Ohio is delayed by 1 year. Problems with zoning, infrastructure, and workforce persist. While TSMC is beginning production of 3-nanometer chips in Arizona, Intel still has not launched mass production of its 18-angstrom 18A process. And most importantly, the market no longer believes. Intel's stock has lagged behind the industry index by nearly 1/3 over the past year. Goldman Sachs is lowering its forecast. The reason? Falling margins, technological lag, and the inability to compete with Samsung and TSMC, who have already begun testing 2-nanometer processes. But this is not the end. Beijing is not satisfied with simply replacing Intel in smartphones. It is moving into cloud computing, data centers, and neural networks. Already today, more than 75% of China's strategic sectors, from energy to defense, have transitioned to Chinese processors. Huawei, SMIC, and Lungsan receive over $58 billion in state support annually, and Intel is losing jobs. In just the first quarter of 2025, 1,250 employees were laid off in Oregon and California. The problem is not the stock. The problem is the future. And if you think this will stop at chips, you have missed the point. China is preparing for a full economic decoupling from the United States. The next step could be an export ban on gallium, rare earth elements, and AI chips. This is not just a retaliatory measure. This is a reformatting of the global tech world. China is building a technological civilization in which America is no longer a participant. Even Europe is now looking to Beijing as an alternative. The American logic has failed. The White House assumed that cutting off access to equipment would halt China's tech sector. But instead of a halt, there was a breakthrough. China proved it can manufacture chips without EUV. It deployed them at scale. It ramped up domestic demand, and now it has become self-reliant. But the consequences go much deeper. If China shows the rest of the world that it is possible to build a complete technological ecosystem without the United States, it will destroy the American model of innovation export. Already now, in Indonesia, Brazil, and South Africa, discussions are underway for purchasing Chinese servers and platforms. China will offer its own stack, complete, from hardware to software. And no one will be able to stop it, because the United States no longer holds the monopoly on technology. It lost it. Not yesterday, not last week, but when it placed politics above strategy. While China was building its industry, America was imposing sanctions. While Beijing was subsidizing research, Washington was passing laws that were never implemented. While SMIC was perfecting DUV lithography, Intel could not resolve issues with the 10-nanometer process. And now, the window has closed. All that's left is money. But money is not equal to time, and there is no time left. Against this backdrop, other processes are unfolding. Prices for laptops, server solutions, and enterprise platforms based on Intel have already begun to rise. According to Bloomberg, Dell and HP have factored in price increases of between 12 and 17% due to supply chain instability. Because volumes have dropped. China has exited. Now there is a choice: cut production or raise prices. Both strategies hit the consumer, and this is not abstract. It will show up on your next invoice, for hosting, for infrastructure, for AI modules in medicine and logistics. No one will be spared. And even with all the billions allocated by the government, Intel cannot buy back the lost years. Government support can offer a chance, but it cannot speed up the laws of physics. Moore's law cannot be bought with a grant, and everyone managing money today understands that. But the problem is bigger. China is not just building an alternative. It is building it fast. It is ready to offer that system to others. Where Huawei was once a fringe player, today it is a full-fledged contender in the enterprise solutions segment. Where SMIC was once considered a laggard, today it is the locomotive of China's technological independence. America can still fight, but no longer on its own terms. And the question now is not whether Intel can recover. The question is whether China will allow even the slightest chance for it to do so, because control over chips is control over the future. And if Intel falls out of this game, an entire generation raised on American technological supremacy will fall with it. Share your thoughts. Do you believe the United States can regain its leadership? Or are we already living in a new reality, where the rules are no longer written in California, but in Beijing?